The topic of today is, as you saw in the title for the session, is really finding the easy money in trading Forex, trading anything really. And when I say, I want to make sure I clarify that statement. When I say find, easy, I'm always careful not to use that word easy when it comes to trading, because I'm not trying to say that trading is easy or any of this is easy. But there are some nice simple rules that we can use to help really find that easy money, those easy profits in trading. And let me explain what I mean by that. Okay, let's start the session. Let's go over some recent trades that either I've taken or we've taken in the program. If we look back a week or so, I took a couple trades here, one in the NASDAQ, one in gold, and we'll look at some others in a minute. And I want to show you how we do this. So these are just and by the way, anytime you see statements on this chart, make sure you understand these are all real trades. These are not with real money. These are not hypothetical returns or demo accounts. I know there's, so I just wanted to point that out to you. So if you look at the trades, and we could start with, let's just start with maybe gold. Okay. And actually, this I'm looking at this. This needs to be the exit price was right there at 1312. So if you take a look at the screen, so we've got a supply level in gold, right? Remember last session we did kind of a back to basics. So prices are trading sideways, strong drop out of this level. Okay, that tells us that supply exceeds demand here, and that banks and institutions have a lot of gold to sell here. It also tells us, okay, and what tells us that is that prices couldn't stay there and fell away. It also tells us that whoever was selling in a big way there did not fill all their orders, right? We know that because if supply and demand were equal here, wouldn't price just keep trading sideways? It would, but it couldn't. It fell away. Now, we also know, remember, look at it, and if you get this, I'm only speaking to things we know to be true, right? Let's keep anything subjective out of it. You don't want to bring anything subjective into your trading decisions. Next, we know that price traded all the way down. Let me try to make this chart a little bit. Is that better? So we see the price traded all the way down to 1306. Okay, so when we see the price traded down to 1306, what do we know about the demand side? Right? We just want to figure out where banks are buying, where banks are selling. So the fact that price traded down to 1306, right, from 1318, tells us that there cannot be any significant demand until 1306 or lower. Right? Does everybody understand why that is? If there was significant demand above 1306, price never would have traded down to 1306. Right? It couldn't. It's not like it's actually not physically possible. So now price starts trading back up to that 1318. So if price gets to 1318, that's where I sold short in this trade. This is just a short-term income trade, just a quick little day trade. So when price comes back up to 1318, we now know two things to be true up here. Number one, well, three things really, two things. So someone is buying after a big rally in price, and we know only a novice retail trader would do that. Number two, they're buying right into a price level where the chart already told us supply exceeds demand. So we have enough evidence to sell short here. And the third thing is we already know that there can't be any significant demand until 1306. So now we're in this short at 1318, but where should the profit target be? Well, we do have a little new demand here at 1309, right? 1308, 1309. So because of that, it took our exit at 1312. Okay? And that's what I mean by taking the easy money. Instead of trying to get all the way down to 1310 or 1309, I know it's going to be much easier to achieve a profit target of 13.12. Now, most of the time, I'm leaving some money on the table, but I'm okay with that because the winning percentage of and odds of the trade being successful, I've increased that dramatically. So if I found a way, right, to get to increase my winning percentage, if I found a way to do that, what should I do if I want to make more money? Should I go for bigger moves, or should I simply add position size to a strategy that allows me to find that, that easy money? Does that make sense? Let's see, Drew, why is there no demand at 13.12? Yeah, this area here would never be considered demand. If you follow the odds enhancers, and I'm not sure that all of you have them, but way too many candles in there. And, notice price goes all the way down to 13.10. This is a big wide and whippy area. That would never qualify as demand when you score them out using our odds enhancers. Okay. And that's why price just goes right through it, because there really is no demand, and the chart's telling you that. So again, what you want to do with the strategy, right? Some of you are starting to understand the supply-demand strategy. Again, if you adjust your profit targets, like I'm showing you here, that allows you to really, identify and grab that easy money. Does that make sense? And again, when I say that, again, it's not to say that trading is easy. So hopefully you get the point. All right, if we take a look over here at the NASDAQ, here, I believe the profit target was 39.02, so right up in here. Okay, if we, let me just put I'm almost positive it was. Remember this one. We'll look at it one more after this, and then we'll go over to the live markets. Okay. So again, selling short at a price level where banks are selling the NASDAQ. And then notice the 39.02. Now, why the profit target right here? Because it's before this low right here that I'm pointing to now. That's the lowest low after prices fell from that area. Sorry about that. Just had a little cough there. So notice again, prices fall away from this area and go down to this pivot low right here. Right, this one right here. Then price rallies all the way up for our entry. So at the time of entry, when I look at the evidence that tells me where the demand is, where the buy orders are, which tells me where my profit target should be, all I have to go by at this point with this chart is this low right here. Okay, so I can look to the left, and I'm sure I did, and see where the demand is, but with this low right here, I want to get out just before that. Does that make sense? Now that's a pivot low, which means prices are probably going to go through that because that pivot low is not demand, but at least not fresh demand. We know that. So it's just an opportunity to take the easy money. But again, you may look at these and say, well, Sam, you're missing out on so much profit. But again, if you don't, why are you, this is a big thing. Why are you trading? Are you trading to go for bigger moves? Or are you simply trading to make money? Are you trading to create income from the financial system, from the financial markets? If that's your goal, then why not find the easiest way to do that, to achieve that? And once you do, right, lock that strategy in and simply increase position size. I'm reading back here some of the questions. No, there's no, as far as maximum number of candles on a chart. Yeah, for supply and demand, yeah, you don't want too much trading activity. It's all in the odds enhancers. If you're talking about a supply and demand level, yeah, remember, the less trading at a level, the more out of balance supply and demand is at the level. Okay. We've got our numbers and the odds and the answers, but again, you just don't want a lot of trading activity there. That's key. So let's take a look at another one here. This is just, I believe this is the day before that last one. Here we're looking at the pound Swiss. So this is a screenshot of one of our live trading sessions with our FX students. Okay, we set up a trade for them in advance, right? We're one of our set and forget trades. We were selling the pound Swiss at 152.90 to 153.05 with a stop at 53 right there, 25 and 50 and a target of 52.41. So take a look at the chart. Okay. So again, there's another. This is the screenshot of the live session. So when price was down here at 52.16, we're looking to sell short right here at the black line with a protective buy stop above the area and our initial target right here. Okay. Now you can look at this two ways. You could say, well, wait a second, that risk reward is not great. And this one, I agree with you. Those other two, risk reward is still fine. But the risk reward maybe not outstanding here. But what are the chances that this trade is going to hit once it hits the black line, what are the chances that it's going to hit the blue line before hitting the red line? You see my point? Okay. You don't need to go for the massive moves, right? You want to find a strategy that allows you to, right? And again, this profit target and this one might have been a little close, but the odds of it meeting entry, and it actually almost stopped out, but the odds of it meeting entry and target were extremely high, and it did. Okay. So again, if this is your strategy and you want to make more money, what should you do? Should you start going for bigger moves? Or since you're so consistent, why not just increase position size? Does that make sense? Okay. And lastly, let me run you through. I want to run you through more here. Hang on. That's just August performance. Let me get to one more section here. And hang on a second. I want to walk you through real quickly last month's performance for one of our new students. I want to show you some of the charts real quick. So this is one of our new students, and has only been doing this for a few months. She's got a very consistent track record and a very profitable track record. Okay. No, the pound Swiss, the spot FX, Menage, no, you cannot trade that through the CME. That's a spot market. CME is futures. They may offer that in the futures, but it's not going to be liquid enough. So let's take a look. So here's a new student. She's in college. She's been her big advantage is she's only learned for online trading academies. So she doesn't have any other strategies or education or anything. So that's a pretty big advantage for her. But here's her real statement from July. Now she's only trading one contract still. She's still in the learning and practicing stage, but she's very profitable. Okay, so she had a $12,600 account at the beginning of the month. She ended the month with a $14,700 account. So she made $2,000 during the month just trading one contract in the futures following core strategy. And you'll see she's really trained to take that easy money. And she's got a very profitable 6-month track record. So what should she do now? She's got this profitable 6-month track record. Should she increase position size or should she go for bigger moves? What should she do? Let's take a look at some of her trades. Actually, let's take a look at every trade she took last month. All right, so here's the first trade. She lost $180 on it. There's the second trade she took. She made $433. Notice again, her entry is fine, but look what her target is. It's before this pivot low right here, which is the initial move out of the level. So she went for the easy money. She could have went for more and actually could have made twice what she made, but she went for the easy money. Same thing here, just getting out just before this demand. There's the next trade. There's the next trade. Well, wait, let's go back a little bit. So there she makes $433. Next one, she makes $325. Again, taking that easy money. Nice rally base drop supply. Okay. And then a nice entry at that level. Next trade, she makes $715. It's trading gold. Again, nice rally base drop supply. And again, taking that easy money before below there. Next trade, she loses $200. Next trade, she makes $300. Next trade, she makes $500. Again, look at the easy money she takes here. Everybody see this? So again, she's trading gold. Here's her supply level. But notice price goes all the way down to here before her entry point. So then price rallies all the way up to the supply. So we have evidence she probably could put her target at 1304, but she doesn't. She puts it all the way up at 1310. Does everybody understand that? Okay. She has some losses in here, but she has more wins than losses, which we would expect because she's taking that easy money. That one she went for the real easy money, and she made $500 on it. So here she made lost 200. Then she made another 500. Again, going for the easy money. Notice how she got out before all this supply. Yes, all limit orders. Set and forget trading. Okay. All right. So I think you get the point there. Once you get the strategy, the whole point of this session is first learning to identify that easy money opportunity and just taking it. That's where, if you get in at demand, get out before the opposing supply level. If you get in at supply, get out before the opposing demand level. Okay? That's the easy money. And with her, again, what's great about her is she's just out of college. Imagine what kind of life she's going to have. She's got this skill set down. She just needs to increase position size. Yeah, all set and forget trading. She does not sit in front of the computer screen. She does, most of it short-term income trading, which is fine, but she doesn't sit in front of the screens. Okay, let's look at the markets here. So here we have a trade coming up potentially in the NASDAQ. Now, for this one, if anybody trades the NASDAQ, we'll go to the FX market in a minute. I see the question about time frames up here. No, you're not going to look at one time frame. You're going to look at a couple different time frames. Okay. Hang on 1 second here. You're going to, if you're trading for short-term income, like I was just showing you, you're going to look at 2 or 3 different time frames. And yes, those are very specific. And if you're trading for the long-term wealth side, you're going to look at 2 to 3 time frames, probably 2 there, okay, according to our rules. Okay. Yeah, we'll take a look at some FX markets in a moment. I saw someone ask for my email address, so I just typed it in before I forget. Seiden@tradingacademy.com. And we'll go over more charts here. But if you're struggling, if you're not achieving your financial goals in the markets, just send me an email. We can hopefully figure out why that is and figure it out. So again, if you're not achieving your short-term income or long-term wealth goals in the financial markets, for whatever reason, just send me an email. We'll try to figure it out. There's always an answer. And let me tell you this. I dealt with tons and tons of those emails. Most of the time, it's one of like 2 or 3 answers. So don't think there's not a light at the end of the tunnel. There is. Okay. Ray, she took 2 courses. Yeah, she took 2 courses. So Yeah, Carlos, we wouldn't do that because then you've got half a position size on, for example, at a point where it's going to be very hard for the market to do what you want it to do. Again, if you I think you'll find if you increase the position size and took that easy money, your numbers in the end will be better. Right? You wouldn't, let's say you shorted at supply, so your question there, and you took half your profits at demand and left the other half going. Well, you never would have entered that position in the first place at the demand. So there's really no reason to keep it on there. All right, let's take a look. So here we have NQ. Now let's say the market keeps rallying like it's rallying. Let's say in the next few minutes it goes right up to supply and meets entry. Well, we've got potentially a demand zone right here. Again, I don't know that that's going to happen, but let's assume for a second it is. All right. So let's say by the time this reaches entry up here on the sell side with our stop above, let's say this is the nearest demand zone. We want our target, which I'll make a blue line, before that, and that would be going for the easy money. So if that's so the blue line is exactly a full NASDAQ point above the demand zone. So if this meets entry up here, the blue line would be our target. That would be the easy money. So we want to get in at the level, but get out before the opposing level. Does that make sense? Okay. Let's move on here. Okay, here's the Aussie dollar. Actually, I can look at any market you want to look at. It doesn't have to be my market. So whatever market you want to look at, I'm fine with that. Euro actually hit a little bit of demand. If you want to start with the Aussie, let's do that. Sure, we can look at gold. We'll look at that next. So first of all, with the Aussie in the bigger picture, I want to point your eye to the reason why I started with this one is because it actually has traded up to what looks to be a decent amount of supply. This is larger time frame. Okay, so there's that level right there. But let's go down to a smaller time frame and really see what we have. Okay, yes, we've got all this stuff up here, right? And if I make this, let's just clean up this picture a little bit for you. So we have a couple levels kind of sitting on top of each other here, right? You got this one right here. None of these are really fresh. Right, so that one, even though those two look like they overlap, one's just an entry into the other one. Let's put some lines on the chart here. And there's that next area. Again, the bottom one is just a kind of an entry into the top one. So you've got the Aussie trading up into this, but where potentially could the Aussie fall to? All right, so according to our rules, we would draw our lines right there. We put our lines right there. There's my distal line, right, the lowest price in the base, a proximal line right at the origin of that rally. That's where the imbalance is. So if you're interested in a trade like this, proximal line of demand here, 92.84. So if we went up to 86 for a target, that would be an example of that easy money opportunity. Now, these are not super quality supply zones up here, but this is into that larger time frame area, right? So 93, yeah, so we're right up here. So I just found little small time frame levels inside this bigger time frame level. Okay, so again, getting in at the level, getting out before the opposing level. Make sense? All right, next market. Someone wanted to look at gold. Let's take a look at gold. It's not fresh anymore overseas. No, correct. All right, gold. We got some nice. I'm pretty active in gold, as you saw from a lot of those trades. We got a nice level sitting right here. Let's actually scope this one out. Okay. Tower place, let me just put a box in here so we've got our level. There it is. We're going to have to include that wick. So, right there. So if prices come up into that level, we'd be looking to sell short. That's a nice area of supply. So that's $12.95. Now, if I look at so that's not far from entry, actually. Let's pull this chart over here and find that easy money profit target. So you can see we're going to have this little, watch this. So we've got, let's say we've got some demand right here, right? Okay. So with some demand there at 1283, I want to go 1284 on the profit side. Right there. So I'm just going to a smaller time frame to identify that kind of that easy money. Okay? That easy money profit target. That's 1284. So now I can go down here. You want it all on one chart. It's right there. Okay, so let me put that chart back. All right. So that would be the, obviously the stop would be just above the level. So entering at 1295 with a target of 1284, that's the easy money trade. You follow me? Or again, it's not guaranteeing that the trade's going to work, but that's the concept I'm talking about. Could price go much lower? It could, but anyway, I think you get the point. Let's put this chart. Remember, we've been bearish gold for I think it's over 2 years now, and will remain that way because there's not a lot of significant demand below current price. Right? If you look at the weekly, remember we bring this up probably once a month. That's kind of what we're looking at in gold. Potential move down to 1,000 from the areas we're at now. So we'll see how things play out, but so far the market's done what we thought it was going to do. All right, next market. Again, I can really go over any market. Carlos, it depends. If you're doing that short-term income trading, you're looking at the smaller time frames. So that could be you know, anything from a volume chart to a 5 and 10 minute chart kind of thing, right? Right? Time frame. Larger time frames, we're looking at daily, weekly, that's it. Yeah, we already looked at the Aussie. Let's see. You want to look at the YM? We can look at the YM. I don't normally look at the YM, but let's take a look. We'll find some levels. There's always levels. You never have to worry about that. If there weren't, you wouldn't have a market, right? So we're not going to find any. I don't think we're going to find any supply here, but that's okay. No, actually, we might. Let's see. Let's go down to a 2-minute chart real quick. So we'll start at. We're going to look at some short-term income stuff first. Okay. So you've got this big rally-based drop up here. You're probably going to have people selling at 1793, 91 to 93 up in here. And then let's go over here on the buy side. Let me go back. Let's look at yesterday's. Let's look at yesterday's low. That was right here in the morning. And then below that, you're down here. Yeah, so you know, you probably got a little bounce this morning off this kind of overnight level, which is really not, you know, it's just kind of this early morning area here. Right down here is your highest probability level. But you've got a couple other areas up here. So you could bounce from any of these, but this is the high probability one. That's 1746 with a stop at 41. Again, I know it's pretty far from there now, but you know, you see how price is basing right here? You know, we've got 3 candles here. If after this now, it falls out of this level, maybe down to here, and takes out this demand, we'd look to short a rally back up to the 1781. Yeah, we can take a look at the euro. Let's do that. Yeah, let's see, Sammy. Are you looking at demand or supply? You see, you're liking the euro. We already looked at gold, Chris. I think that's we came up with a nice trading opportunity there, a real nice trading opportunity in gold. So if you look at the euro from where it's at, remember we've been very bearish the euro, and I know it hit some demand, but if you take a look, okay. On the smaller time frames, you'll see there's a little bit of demand here. Not a whole lot. There's still quite a bit of supply above. So we'd still be looking at short rallies in the euro. Yeah, if we look left, you'll see, let's go see what we came into here. Okay. So obviously this is the demand zone. If any of you are in the mastermind community, this is the level we had yesterday. Okay. Any of you have this? Yeah, no, this is a quality demand zone. But after this, you really have nothing until quite a bit lower, right? That's why we've been so bearish. It's the first time we're coming into a first level. Your next level is, you know, below 130. So, yeah, you're very likely to get a nice, healthy rally out of this. But once you get up to some of these supply zones, you're probably going to fall down and, you know, fall further. But look, if you come back down into this Yeah, if you come back down and make a new low into this level, I would be comfortable being a buyer, looking for that bounce to the upside. Okay, so if you came down and made a new low into this level, so it looks like right about 131.78. So if you traded down below that, anything below 78, I'd be comfortable buying this market for a bounce to the upside off of this level right here. Okay. All right. Just notice we just touched the level and barely didn't even really trade into it. So that's that's pretty bullish. Or it's pretty bullish for the level. It means there's what we're looking for. Remember, what the strategy looks for and quantifies are supply and demand, which is unfilled sell and buy orders. So that's really what we're looking for. Yeah, that means it's strong, exactly. You don't have any significant supply till a little bit higher, right? Just find your fresh supply zones. So on the larger time frames, it doesn't come up till about 132. Let's see, maybe 132. Yeah, maybe 132.70 or so. But that's plenty of room. Okay. We look at the dollar. The dollar's kind of stuck up here. It actually gapped, so that's probably going to come down. We already have evidence. There's quite a bit of supply up here. Okay. We can look at another market. I can run through my list, or if you have one you really want to look at, let me know. Something we haven't looked at already. Sure, we can look at that. Sure, let's look at the euro yen. Again, just very bearish. If you just take a moment and look at the larger time frames, you've got supply sitting just above here. And if you look down, you really have nothing fresh on the demand side till quite a bit lower. In other words, if you look at the larger time frames in euro yen, the path of least resistance is lower. Of course, you got to trade up to supply. I mean, we're at kind of demand now. You're more likely to get a bounce in this market from here, right? Obviously, we've got some demand in here, but overall, larger time frame, we still want to be shorting rallies into supply. But if you look at the daily, you're sitting right into a demand zone. You can get a nice rally out of that. Yeah, let's take a look at the sure, I'm just going with the markets that you want to see that you're typing in the chat. Wait for this one chart to load up. But we can start by looking at the larger time frames. Okay. And when we do that, again, similar scenario. You see, and again, I'm not saying this is perfect supply up here. You really have a couple supply levels on top of each other. It's not a market we normally look at, but I saw a couple people wanted to. Not a problem. So we've got supply up there in the larger time frame. But when you look over here, and again, this is larger time frame. that's what you have below, right? That's what you have below. So you've got supply above, really nothing fresh below, at least in these time frames. So again, the simple question you want to ask yourself is, what's the path of least resistance for price? And it's, down. So it all depends on where the orders are. Where are the orders? Having said that, on the 60-minute, I do like this level right here. And again, this is just for a little bounce, but if you trade this market, watch this level down here. This one looks pretty good. I'll blow this up. So we just went over a kind of bigger picture. Now let's go down to the smaller time frames. So watch this one. And again, this market is not the most liquid market, so just be careful. But you do have some demand down here, and we already, and notice just prices just popped up to here. So we've got some, here's some supply, which worked out fine. So this level kind of already played out. But now we know, because all we want to do is say, all right, does this opportunity offer us that, that easy money trade? So once I put these lines in, that'll allow us to put in that target that should be hopefully easily attainable. Again, that's not to say every trade's going to work out, but if you're doing this right, hopefully the majority should. So let's go, just like that girl I showed you, right? That was last month's trading. Yeah, so we go just a few points below that. You're gonna be right here, right around 80. Let's make that the blue line. Okay, so right there. So price come down to here, potential targets right there. I do see a little small time frame supply at 147. I'm sorry, 44.75. So if you really want to go for the easy money, that's right there. You'll pull your target down to just before that. So let's go to 74, even 73 right there. There. Okay. So again, I'm not saying you need to do this, but I just wanted to share with you today just a kind of a little twist on the strategy that I see more and more students using and be successful with, and it's finding that easy money trade. And instead of trying to be the trading hero and going for the giant move, going for that easier money trade and simply increasing the position size if you want to make more money. Does that make sense? All right. So again, if you're struggling or you're just not achieving your financial goals, right, in trading, send me an email, Seiden@tradingacademy.com. For whatever the issue is, if you're just not achieving your goals, short-term income trading, long-term wealth trading, we'll do our best to figure it out. So hopefully everyone has a great day and a great week. Watch some of those trades, especially that gold. And have a great day, everybody. Thanks for your time. It was nice being with you today.